All right, there he is, the man himself.
What's up,
What's up,
boys?
Spadaboom? How's it going, man?
Wonderful. How are you?
I'm doing well. Obviously, I've known you for a minute here. Really excited to have you up here. Badger's made leaps and strides. You guys are pretty much the only DeFi protocol that is representing Bitcoin's interests. As somebody recently that's gotten more on the Bitcoin train myself, I can tell everybody listening right here, like finding good, solid, safe yield, and safety is important here on your Bitcoin is really, really hard to do. That's one of the things that Badger does better than anybody else. So, guys, welcome to Frog Radio. I think this is episode 3 or whatever. We got Spadaboom here. He's one of the founders of BadgerDAO. Once again, saying DAO, Luigi, if you're listening. Guys, real quick, before we get into everything, just a quick word about Avalanche, AVAX. If you guys haven't tried it out, remember to get on over there and check it out. Bridge.avax.network, I think. Let me just double check that. Yeah, that is bridge.avax.network. Ethereum has just been god awful recently. Of course, the fees are super high, especially, the smaller stack. And even if you've got a bigger stack, sometimes just waiting around really sucks. So get on over there to bridge.avax.network. Bridge over. If you actually bridge over, I think more than $75 in assets, they're automatically going to give you some gas for free. And remember, one of the best things about this bridge is that bridging over takes maybe 10 minutes, thanks Ethereum. But bridging back occurs in literally a matter of seconds. Don't take my word for it. Try it out yourself. Once again, they're going to give you gas to do everything for free. With that being said, Spadaboom, welcome, brother. How are you, man?
Yeah, great. Glad to be here.
And we are really, really glad to have you. I know you and I have talked a little bit before the episode about some upcoming things that Badger has going on. You can share however much or as little as you want how this is going to go down. You're going to have about 20 minutes to just kind of spread the word about Badger, talk about Bitcoin, talk about, DeFi, yield farming, really whatever you feel is speaking to you today and what you want to talk about. After that, we're going to open up the floor to a Q&A with the audience, and they're going to have the opportunity to ask you questions about how to use Badger, this and that. Now, what the show is really about is education. So if you do have some alpha to share in terms of the best way to use Badger, I think that would be extremely useful for the audience. And just a reminder, when we do get to that Q&A session, this is being recorded. So I am going to repeat this, but you asking us to speak, to be a speaker here, is also consenting to being recorded. Your voice will be on YouTube, will be on the internet. So just please be mindful of that. If you don't want your voice recorded, please do not ask to come and speak. Chris, let's get into it, man. What's going on with Badger? What do you have to tell us?
Well, Messi, maybe it makes sense to give a little bit of a history of Badger. What do you think?
Yeah, you're in the driver's seat, bro. So if you want to talk about Badger, why you had the idea to create Badger and kind of lead in that way, just take the wheel, man. It's all you.
Yeah, I'm just thinking in general, if people don't know about Badger and what we're all about, it might be good to give a little bit of a history. But so for anybody that doesn't know about Badger, we're a DAO with a singular focus, and that's to bring Bitcoin to DeFi. And what that means in reality is building the infrastructure to bring Bitcoin from the Bitcoin network to other blockchains, and then building the different applications on those blockchains to bring utility to Bitcoin. I myself have been a long-term Bitcoiner, going on 9 years, also a long-term Ethereum and cryptocurrency enthusiast in general. And I know, probably better than most, that there's not much to do with your Bitcoin, especially if you're not comfortable, giving your Bitcoin to black boxes in most instances, which are, centralized lending providers or things along those lines. So, with that, Badger launched December 3rd of last year, which is wild. That it's almost been a whole year. But nonetheless, we launched with our first core product, which we call Set Vaults. And essentially, they're ways to earn interest on your Bitcoin. And that launched on Ethereum mainnet. And you could deposit into these vaults with a variety of different tokenized Bitcoins, pretty much any one that exists, WBTC, REN BTC, SBTC, PBTC, OBTC, so forth and so on. And then we'll run completely non-custodial, automated smart contract-based strategies to maximize your yield. We had some immediate success in launching that, which I guess showed a product market fit for people that wanted to earn on Bitcoin because there was no protocol focused on that. We accelerated to a couple $1 billion in TVL, I think in February, March. What's important to highlight there is, with that product, with that ability to offer interest, much of that interest was based off of the Badger rewards that were provided, which is our governance token. So that was a way of distributing Badger, and it continues to be a way to distribute Badger. There's currently 30,000 holders of Badger around the world. Probably something like $25 or $30 billion of Badger has been traded. It's completely community run and operated. Me and a few people got the ball rolling, but well before we launched, it was a way to engage different community members that wanted to drive this ship and believed in our vision. And that, sparked and led itself to have a very passionate and involved community. And I couldn't be more proud of, what that community has evolved into today. But subsequently, as we started seeing some success with our initial product, we started working on some other products, of course, all in the same vein of, bringing Bitcoin to DeFi. So we launched a Bitcoin bridge in partnership with REN. As of today, I think $400 or $425 million worth of Bitcoin has gone through that bridge in the last 5 months or so. And then we went forward to then launch interest-bearing Bitcoin, which is, you can call it a productive Bitcoin. So it's an index of different yield-bearing Bitcoins, primarily that have been deposited in our vaults. And that one single asset allows users to get utility out of Bitcoin while still earning interest. And our goal, in the near term, call it the next 12 to 18 months, is really onboard millions of people into earning interest on their Bitcoin through IBBTC, interest-bearing Bitcoin. We think, when all the centralized exchanges and decentralized platforms start enabling people to swap right from Bitcoin or any asset into IBBTC, we think that's the easiest route for anybody that doesn't want to know about DeFi, doesn't want to learn about how to do all these types of things. So literally just press a button in a few seconds, be earning a conservative yield. And we can imagine a day where, the biggest platforms in the world like PayPal and so forth and Robinhood, really any platform that has large amounts of crypto assets and a crypto user base, we believe that inevitably will want to offer interest or different types of services like that. And of course, Bitcoin's the biggest asset in the entire industry, and we believe it's going to continue to grow to be an enormous asset globally. So that's the bets that we're betting on. And to give a little history of kind of how everything then evolved from that point. So it was a little bit of a tough road after the market took a dive. The 2 billion in TVL went down to 400 million or 300 million. And it was really based on the foundation that we had no real way to influence the underlying yield. We were at the mercy of, simply Badger emissions, because there really wasn't any strong Bitcoin yield in the entire industry. So what that lent itself to was a reevaluation of the best way to, accelerate towards our goals and to provide that. And we made a pretty dramatic shift. We decided we were going to be a partner-first protocol, so our vaults are naturally yield aggregators, and we said we're going to make these partner-first, meaning that the protocols that we deposit LP tokens into on behalf of users, we're not going to dump those tokens. We're going to optimize those tokens to give the users higher yield, but also to support the protocols that we're farming. Subsequently, this was right around the time Convex was launching. And we built a relationship with their team before they launched, and we made the conscious decision to change our Curve LP strategies to farm and hold Convex. And today, Badger is the largest Convex holder of any protocol in the world. We have about 1.3 or 1.4 million Convex tokens. And what that, of course, has been enabled us to do is have a real influence on yield on Bitcoin in the entire ecosystem, because Curve is the backbone of all yield in DeFi. So now we have the ability to ensure Bitcoin gets love, that our users that deposit in our vaults earn a good yield on their Bitcoin. And then, the step forward, which is really coming in the next week or two, is interest-bearing Bitcoin having a curve pool. It was recently approved for a gauge, meaning that it's eligible to get curve rewards and then subsequently convex rewards. And the way that things work for that is every 2 weeks there's a vote for locked curve holders and locked convex holders. And now into the end of the year, at a minimum, Badger is going to be putting its entire vote weight on the IBBTC pool, which should lend itself to have substantial yield at scale. Double-digit yield over $1 billion is our hope. And we want this pool to literally be the black hole vacuum and the largest Bitcoin pool in the entire DeFi industry, which in turn obviously has a lot of liquidity, allows for low slippage trades, has all the aggregators building on top of it, and allows institutional grade capital allocators to get yield at scale now with $100-200 million worth of deposits type stuff. And then as well for other retail focused, centralized or decentralized applications to build yield products around this pool for Bitcoin. A good example of that is maybe something like a BlockFi that can't get yield on their Bitcoin because, it's really hard to get yield. Maybe they look to use a pool like this at scale to be able to, increase the yield that they give to their users. I don't know, but the possibilities are endless. So that's really our focus and goal, is to make that pool as big as possible, increase the yield for Bitcoin, and really be the steward of all yield on Bitcoin across the DeFi ecosystem, and then bring IBBTC to all the other chains so it becomes the most dominant Bitcoin on any chain, very akin to, what Abracadabra has done with MIM, and the fact that it's the dominant stablecoin on most chains. Badger has deployments for their vault and yield strategies on Polygon, BSC, and Arbitrum at the moment, with the intention to expand, to Phantom and Avalanche and so forth. And once we get IBBTC where we want to get it on mainnet, the intention then is to launch IBBTC Curve pools, really wherever Curve is. And to make that really the foundational Bitcoin asset, no matter where you are. So that's a bit about Badger. That's a bit about our history and how things have changed, where we're going, and what our community is all about.
Yeah, and that really is incredible. How far you guys have come. I do have a couple of questions for you, and I of course know the answers to these questions. But some of our audience might not be very experienced in terms of DeFi. Just some newbie level questions. You did speak about Convex. I'm sure if you guys have been on crypto Twitter at all, you've heard people talking about the Convex wars. What are the Convex wars? Is my first question. And I'm going to ask multiple questions because you flow so well, and I'm just going to kind of put these thoughts in your head and let you run with them. But the first off, what are the Convex wars, and how does Badger, being the largest holder of Convex, how is that significant? What does that actually mean, in terms of controlling yield and being able to look out for, Bitcoin holders' interests? Also, I'm very curious, because you talked about, Badger kind of being an aggregator, and, do you guys do auto compounding and things like that? Because especially if you're, native to the Ethereum chain, with a smaller bankroll or even with a larger bankroll, auto compounding, can be, or compounding in general can be very cost prohibitive. Those gas costs, if you're not very, very wise about, when you actually do these things, those gas costs can really eat into your APY. And then also, just for everybody that's listening, and everybody, especially like recently, I've been trying to learn more about Bitcoin myself. I've been a shitcoiner for a very long time. I've never really been a big Bitcoin holder, a Bitcoin proponent, but I've been reading about it, and I think I'm starting to understand why Bitcoin is so important. So if you could talk a little bit about why Bitcoin is important relative to all these shiny shitcoins. And look, I still love shitcoins, guys. Like I'm not talking shit about the shitcoins, but Bitcoin, whereas I used to think, oh, this is just old boomer coin, I'm starting to come around to the idea that, Bitcoin has an extremely significant role in society's future. So just, your thoughts on that. And then finally, and I know this is a lot, for anyone that's listening, what's the best way for them to get, how would they best use Badger to get yield on their Bitcoin, to feel safe, about being on the Badger platform, in a cost efficient manner? Should they, with a smaller portfolio size, when you guys do have this IB Bitcoin, should they just be aping in? Should they wait just a little bit, for you guys to get deployed onto Phantom, to Avalanche, to these other chains? Just go ahead. Take it away.
Alrighty. So let's talk about the Curve Wars. I think that's a great place to start. So for everyone that doesn't understand, Curve has a locking mechanic where they essentially say there's a range of APY that you can get, and the APY is based in Curve emissions. The Curve emission schedule is 4 years long, and it's fixed. So what that means is anyone that's locked takes their Curve and locks it for up to 4 years, has the ability to get a higher APY, has the ability to participate in governance votes, and of course has and the key thing with the governance votes are the emission schedule, right? So if you're able to participate in governance votes, every 2 weeks there is a vote to define what is how much of this fixed Curve emissions should go to which pool. So you start thinking about all the different pools that are there. There's obviously vested interest for the assets inside of those pools to want to get more Curve emissions, because that means it'll attract more liquidity to their pool. People can yield farm in those pools and earn more interest, which is really, call it what it is, the only core use case for stablecoins as it exists today, outside of maintaining an on-chain footprint without risk of market volatility. But that really shaped everything. So what ended up happening was that mechanic really evolved. Curve became more permissionless, and then Convex comes around. And Convex says, put your Curve with Convex. We'll give you a wrapper token back, CVX Curve. And we're going to take all that Curve and we're going to lock it for the max 4 years. Why is that important? Well, then Convex then gets the enormous vote weight to decide not only on governance votes, but specifically where the Curve emission should go every few weeks. With Curve, though, there's a whitelist, and only Yearn, StakeDAO, and Convex have been approved for that whitelist to even participate in this type of stuff. So a lot of protocols that have stablecoin pools like Frax and MStable and Alchemix and Abracadabra and a variety of others, they said, well, we want to influence the ability to get more yield on those pools, but we can't do it with our own Curve positions. So instead, let us acquire Convex. And then Convex went along and said, well, we want to introduce governance to this process. So only people that lock their Convex for 16 weeks are able to participate in these votes. So that's what really accelerated the Curve Wars, and then subsequently the fight over people and protocols that want to hold a lot of Convex. So that's a bit about kind of what's happening in the market and the dynamic of it. And then some of the rumblings that people tend to talk about quite a bit are Curve's V2 pools, which are around today. An example of that's the recent, I think, Euro USDT pool, have the ability to have two different priced assets, so non-stable or non-like priced assets in a single pool. So what that could potentially turn into is, governance tokens against WBTC or stables or ETH really exploding on Curve. And really the only way to be able to drive emissions for those pools is to have some level of vote locked or vote escrowed Curve or vote locked Convex, so you can then influence those emissions. And many people believe that's going to be a big acceleration of this Curve Wars, and now it's kind of the beginning of it all. So how does that relate to Badger in particular? Well, Badger's primary deposits are from Curve LPs that are in the different Bitcoin pools. So our ability to enable users to get interest on their deposits, those Curve LP deposits, which are single-sided Bitcoin deposits, is that those pools get a good solid vote weight every 2 weeks. Now, no one was voting for Bitcoin pools forever, right? Like, people probably understand just the level of yield that comes out of Curve. It's a lot. And, of all the Curve emissions that were going to pools every day, 3% or 3.5% was going to the Bitcoin pools, like all the pools combined. And the Bitcoin pools make up 20 or 25% of all the TVL on Curve. So there was obviously a misalignment there. And, we came around and, decided to build, instead of participating very actively in bribes, which many people have probably seen, or acquiring a lot of Convex ourselves, we said, you know what, we need to build a flywheel. We need to build a self-perpetuating machine that gets us more Convex, which in turn gets users more yield on their Bitcoin if we're able to deposit more into Convex. So over the summer, with the guidance of Curve and Convex and working on the strategy, and of course taking our partner first approach, we built the only vote-locked Convex vault, meaning you can deposit your Convex. We then lock it on your behalf. We built some additional functionality to it, so there's partial redemption. So whenever there's available Convex to withdraw, you can actually withdraw to your position, which is unlike locking directly on Convex. And then there's a bunch of additional yield in the form of CVX Curve and also Badger, of course, that you earn by depositing in that vault. But really, anyone that's in the Bitcoin pools on Curve or deposited in the Badger, it doesn't even have to be in Badger, but anyone that's in the Bitcoin pools and holds Convex, it's most likely in their best interest to lock that Convex with Badger, because we're literally the only ones that are voting for those Bitcoin pools every 2 weeks. So now you fast forward and say, well, okay, that's great. You're voting on a bunch of pools. That's cool. Like, people get different types of yield on their, or better yield on their Bitcoin deposits in Badger. But the problem is, because there's so many Badger Bitcoin pools, it's really hard for us, because of the bribe environment, because of how many people are not voting for Bitcoin, for us to, even though we're one of the largest holders at a protocol level of Convex, to vote on all the pools and have a real impact. So after some analysis, the community decided to really dedicate our voting weight towards 2 pools as a test over the first few voting rounds. And what happened there was we ended up seeing a pretty significant bump in the yield on those underlying underlying pools. So, for example, when we participated in REN, it went up 400% in yield. When we participated in TBTC, it went up 1,000% week over week in terms of underlying Curve emissions, and that really opened our eyes to the type of influence that we could have. But again, that's all fine and dandy. But in the end of the day, for Badger in particular, what's most important is to make IBBTC the most productive cross-chain liquid Bitcoin that exists. So, with the launch of the IBBTC pool next week and our ability to put all of our vote weight there, we actually decided to take it as an opportunity to consolidate a lot of the things that are happening in the Badger app. So there's a proposal right now up on the forum, if anybody wants to check it out at forum.badger.com, to push emissions from all of our Curve pools, all the Badger emissions, to the IBBTC pool when it launches, and to put all of our vote weight on that pool. And then subsequently, we hope to see that pool then explode in TVL, because it's the best yielding Bitcoin pool in all of Curve. But then how does that really speak to the flywheel? Well, what ends up happening is every time there's a BTC Curve LP deposit in Badger, we then take that Curve LP deposit and deposit it into Convex. we are now earning CRV and CVX. To Messi's point, a mainnet in particular, auto compounding gets very expensive. So on Convex, you have to go and you got to claim it consistently. And then if you want to do things with it, you got to pay a lot of gas. So instead, what Badger does is it takes that curve and it stakes it for CVX curve, and then stakes that. So it's yield bearing, earning 60 or 70% interest, and then and distributes that to the user, and it's claimable every few hours. But then we take the CVX and we lock it. So right now there's $500 million worth of Bitcoin, maybe $600 million worth of Bitcoin farming CVX every day. And when it's locked, that's what gives Badger the influence to be able to vote on underlying yield. So if you start thinking about that at scale, you start saying, okay, well, if Badger can get $2, $3, $4 billion worth of Bitcoin into Convex earning CVX every day, if there's a concentration on that vote weight, the amount of locked CVX could be, in the tune of 100,000 CVX tokens per day. That will allow us to continue pushing yield at scale in a very high TVL pool, again, 2 or 3 billion, 4 billion in that range, where usually the yield just gets massacred, right? You can't necessarily support a high yield with such high capital in the pool. But as more and more capital goes in that pool and then comes into Badger, we put it into Convex, we earn more and more CVX. And that's the flywheel that enables really Badger to outpace anybody without going out and spending millions of dollars a month in bribes and trying to do a variety of things. So it becomes this flywheel approach for sustainable yield on Bitcoin and continued growth and influence within the Curve and Convex ecosystem. So that's a bit about the Curve Wars and as it relates to Badger. I know that was a lot, Messi. Maybe you have a couple questions around that or anything you want to point out.
I think once again, like you have excellent flow and you're very well spoken. So always a pleasure talking to you. I think just really quick, because we do want to get into the Q&A part of this, and try to keep the episode short and sweet and digestible. Really quick pitch, because I'm definitely considered to be a shitcoiner. Hey, you guys got me. I'm definitely a shitcoiner, not a Bitcoiner by any means. But as a shitcoiner, and especially like seeing all these institutions invest in Bitcoin, seeing the M2 money supply, seeing everything that's happening in the world right now, it's kind of like really, really sketchy times. Just once again, really quick before we get into this Q&A. Why is Bitcoin important here? Why wouldn't I just YOLO all in, gamble plays on shitcoins and sell that to USDT or USDC or whatever? Where does Bitcoin kind of fit into this, into the future?
Well, you got to look at it outside of the lens of, speculative investing, right? So if you're looking at it from a pure speculative investing and your ability to get the highest return in the shortest amount of time, Bitcoin's probably not not the opportunity that you want to pursue. But Bitcoin has a real chance of becoming a global currency, right? Like it's the first permissionless currency that's ever been created that's run completely decentralized and not created by the government. That really goes against what many people believe is broken within the fiat system. And there's so many things to even speak about there. It's almost not even worth it. Like Bitcoin, if it can move around the world in seconds for pennies, and it's one kind of global asset that everything's denominated in, like that just changes how values exchange between people around the world, right? Obviously, it being a fixed asset goes against the concept of the money printer and what and in turn happens around inflation, right? You probably see charts floating around of, the US dollar and inflation against the price of all these other, things that we see every day from bananas or whatever, real estate. With Bitcoin, that doesn't happen because of the underlying mechanics, which are immutable. These things aren't changeable. Someone can't come in with a pen and a paper and a big dick and say, I'm going to change this stuff. Instead, the code's the code, and it's run on a completely decentralized network that can't be influenced by anybody, one individual party. So, that's the pitch for why Bitcoin could become the money of the future, and in turn, that sounds like a pretty darn good store of value. So probably people have heard that term thrown around. Like if you're thinking about a store of value, you're thinking something that can withstand the test of time, that's easy for you to just hold. And people compare it to gold and say it's digital gold, except again, it's a fixed supply. It's easily transferable, which gold obviously isn't. The fact that gold just can essentially be mined forever, that in itself makes it way inferior compared to Bitcoin. But nonetheless, all these things suggest that there's a real long-term future. It's been around the longest, of any cryptocurrency that exists. It obviously has the attention of all of the large capital allocation vehicles in the world, and that's going to continue to grow as ETFs and all these things come online and more governments adopt it as a currency. Like it's reached that point of acceleration. So if you're participating in the cryptocurrency industry, there's a high probability that 99% of the things that you see today, you won't see in a few years from now. It's very hard at this point to say that about Bitcoin. So, take that for what it's worth as it relates to, how you're making different decisions and, participating in the ecosystem.
I think that was a fantastic answer. We're going to go ahead and dive into the Q&A part of this. We're going to keep it in about 15 minutes. Really quick ground rules, and then we're going to get rocking and rolling with this. Here's how this is going to go. I'd ask everybody, because we do have limited time here, to please be respectful and not ask like 5-minute long questions. If you do want to come up and ask Spadaboom a question, please come up, ask one question, be respectful, zero tolerance policy for trolls and shit. Don't waste anybody's time. Like we're all here just trying to learn, trying to figure out how to navigate DeFi and, better our own lives. Once again, you are being recorded. So you requesting to speak is consenting to being recorded. Just a reminder of that. Okay, so here's how we proceed. So you're going to request to speak. Our co-host today, Coach Popovic, is going to invite you up here to speak. He'll accept your speaker request. Please wait until you're called on. When you're called on, you can ask your question. After you've asked your question, please mute your mic. Let Spadaboom answer your question. And then after that, even if you want to get into a conversation or whatever about it, we just don't have enough time for that. So if you could please just say, thanks for your time. I appreciate that. That would be fantastic. At that point, Coach Popovic is going to remove you from the speaker role, and we'll keep this going for the next about 15 minutes. So guys, if you want to come up here and ask questions, please do so now.
So formal, Messi. Oh my goodness.
I know. I can get.
Like, who are you? Like, this is not the Messi I know.
Yeah, look. I think just getting married and getting old does change you. Unfortunately, I'm not the troll. Apparently, I was once known as in the past anymore. But maybe that's for the best. So it looks like we do have crypto something with a K. You're up, man.
Looks like you're on mute.
Sorry, I was on mute. Yeah, any plans for a layer 2 or another EVM chain like Avalanche so that we can have lower gas fees? Thank you.
Yeah, we were one of the first to move to other chains. So we went to Binance Smart Chain in March or April. Subsequently launched on Polygon and on Arbitrum. So we're in all three of those places. Arguably, Arbitrum's probably the deepest liquidity and the ability to participate more actively in things that you're used to participating with Badger, like single-sided BTC deposits and Curve. But those are all available now. You can go check them out. And and we're going to eventually start launching on other chains. I think the goal is to really build this IBBTC pool as big as we can and gain additional influence through the flywheel. And then, of course, continue to support our partners like Curve and Convex wherever they are, and do that with IBBTC.
Thank you.
No problemo.
Yep, thanks for your question. Let's move on to Memin. You're up, man.
Yeah, it's Memento. My question's for you, Messi. When are you going to stop bullying Sad Start?
Oh man, never. Once again, he bullied me yesterday. He made a joke about my wife, and I will never forgive him.
Yeah. The wife's off limits. I get that. All right, thanks, man. Love you.
All right, love you too, bud.
There's lots of love going on here.
Lots of love in the crypto world. It's good too. Great to witness. We are going to make it together, or not going to make it together. So we might as well all be friends. We're all walking the same walk and the same journey.
Well, certainly.
So we have
the traveling kitty.
An apology, guys. Yeah, the traveling kitty. You were up.
Howdy. I'm wondering what the relation is between the Dig token and the Badger token.
Sure. So Dig is one of the products that we built and launched, I think in January, February of this year. And it was the first rebasing Bitcoin. It's it's had let's call it its up and downs naturally as rebasing tokens have. I think it's been unbelievably steady as it relates to the price of Bitcoin over the last few months, and I think the big acceleration for that is in the Badger system. We have in the Badger app we have something called Badger Boost, which means if you want to get a higher APY on your Bitcoin deposits, if you hold Badger or Dig, you can actually earn more on your Bitcoin. So that's its primary use case today. It's very often held for that purpose, especially since there's been a higher correlation with the price of Bitcoin over the last 3 or 4 months. To answer your question, Mr. Kitty?
Yes, thank you.
No problemo.
All right. Thank you, Mr. Kitty. We have Tim up next.
Hey, guys. What's up, Spads? So I'm pretty new. I'm like a pretty big newbie to this stuff. I mean, I've been holding Badger for a while, but haven't really dove into some of how it works and all that. I just read a pretty big article on Curve and Convex, and kind of your explanation of it was making a bit of sense, but I'm still pretty new. So I'm just curious, what are some of the best ways for a newbie to get involved in Badger and to really understand what I'm doing when I'm, trying to get a yield on my Bitcoin or work with Badger in some ways. What are your any recommendations there?
Yeah, so there's 2 things I'll speak to. One is, it may seem a little more complicated now, especially coming to the Badger site. That's going to change in the coming weeks as we consolidate a lot of our efforts in providing yield through one single pool. And then we're also going to have the ability to deposit in that pool with native Bitcoin from the Bitcoin network, REN BTC or WBTC. So you won't need to go to Curve, for example, to get the LP token first. So that's going to make it easier. So essentially, if you have either native Bitcoin or any form of single asset Bitcoin, you press deposit and now you're earning yield. That yields are going to be a mix of interest-bearing locked Convex, interest-bearing locked Convex Curve, and Badger tokens, so a variety of different tokens. And then you can claim those tokens or leave them to be claimed, and while they continue to auto-compound on your behalf, so you don't have to pay all the gas fees. And then subsequent to that, those Badger tokens that you earn, if you hold them, they could increase your yield on that Bitcoin deposit, because the more Badger Dig you hold, the higher on the scale of the APY that you'll get. So that's Badger, and I think if people and I think that's probably enough for many newbies. But if you dig under the covers and you start thinking and you want to start understanding, well, where's this all coming from? What's Curve? What's Convex? What's important to understand is, Convex is the backbone of yield in all of DeFi, meaning that, being one of the largest platforms in terms of TVL with 20 billion or 21 billion, a lot of yield is generated through the emissions that come out of Curve. So, if that's the case, if there's a protocol on top that allows anyone that deposits in them to get the max boost in Curve rewards. I mentioned this earlier. Boost in Curve is based on you taking your Curve and locking it for a period of time. If there's a protocol, i.e. Convex, that gives you a better reward on your Curve LP deposits by putting it into them, since their contracts get the max boost, then you're gonna see additional value and additional yield participating in Convex, which is the reason today I think Convex has 75% of Curve LP tokens living inside of its protocol. So when you start understanding that, it helps you better understand, what you're actually getting through Badger. And then if you go a step further, which, is definitely above the head of a lot of newbies, is, why and what influence does, Convex and Curve tokens have on the yield that comes out of the yield monster in DeFi. So that's most likely how I would look at it.
Cool. Thanks a lot.
Yeah, man. I feel like, Tim, I've met you before. I don't know why. I feel you're Canadian, right?
Yeah, I'm good buddies with Amir, but I don't know if we've met. Are you from Toronto?
Yeah, I am.
Oh, cool. Well, maybe we have.
Maybe we have.
Nice.
Cool. Good stuff.
All right. We have Inherent Nice up next. And guys, we have probably after him, we have time for another question or two. So, if you do have questions, make sure to get queued up now. I think, Coach Popovic, will accept maybe one or two more requests after Inherent Nice.
Awesome. Thank you, guys. Yeah, I was just wondering, Bitcoin maxing myself, but a bit always concerned about, putting it onto the Ethereum blockchain. Obviously, someone with a lot of experience here. Could you talk about a bit of the pros and cons of the various wrapped Bitcoin that we have today, including, wrapped Bitcoin and Ren BTC and the other ones that I might not have heard of?
Sure. So what's important to understand is bringing Bitcoin to Ethereum or any chain increases, like it's almost like a risk tower. And there's new layers of risk that are introduced at every stage. Not saying that risk is not manageable and actually hedgeable with certain types of insurance protocols, but it's important for anyone to understand that there is going to be more and more risk at every stage. And that's very often why you hear, and not for nothing, a lot of people that are either, all Bitcoin or nothing, they tend to speak very loudly about, certain exploits in DeFi and all these types of things. Like it's an emerging industry. It's an emerging tech stack. It's emerging technology in general. So it's obviously going to be immature, and there's going to be a lot of things that are discovered along the way, although it's accelerated tremendously in the last couple of years. But nonetheless, when you decide to bring Bitcoin over, really the core, the majority of Bitcoin that's coming into DeFi or coming to Ethereum or other chains is in WBTC. Rem BTC, I think, secondary to that, and then HBTC, or it might be the other way around, HBTC and then Rem BTC. So if you just isolate those three for a second, because they represent probably 90% of the entire market share of Bitcoin on other chains, WBTC is being custodied with BitGo, right? So you're trusting another counterparty with your Bitcoin, and you're trusting for every Bitcoin that's being deposited there, there's a subsequent ERC20 representation or another blockchain representation of that Bitcoin being minted on that chain. You then now have a tokenized Bitcoin. And if you want to go and deposit it into Curve, for example, which most people do, there is the smart contract risk of Curve. Of course, Curve has $20 billion, has been around a very long time, has a code-based, smart contract base that's been very well tested and battle tested in production for, as I mentioned, extended period of time. There's insurance that you can get on your deposits into Curve. But then if you take that and you deposit the LP token from Curve into something like Badger, you now have additional smart contract risk, because if those deposits are exploited through the Badger platform, which we haven't had a vulnerability in the Badger platform since launch, it is, that's an additional layer of risk. Now, then what Badger does with those tokens, in this instance, puts it into Convex, that's another layer of risk, right? So you can see that the stacked layer. Now, at each turn, you can quantify, can you tolerate that level of risk based on the protocols that you're putting your assets into. Now, what's important to delineate here is that there's complete transparency on this side of the fence, right? On the Ethereum side, in the 3 protocols that I talked about, Badger, Convex, and Curve, at any and all times, you can define how much Bitcoin is there, what the Bitcoin's actually being put to work, how it's being put to work, where it's going. Everything's on chain, everything's trackable, everything's completely transparent, which is not what you can say when you take your native Bitcoin and put it into an exchange, which is not what you can say if you take your native Bitcoin and you give it to a centralized lending provider like a BlockFi, for example. So again, at all turns, unless you hold your Bitcoin in cold storage, there's always going to be more and more subsequent risk based on what you do with it. Now, to speak to some of the others, like Ren in particular, Ren is a little bit of a hybrid. It's primarily custody today. And it's, for simplicity purposes, not to go into the details, but for simplicity purposes, you can think about it like a multi-sig, meaning there's a variety of different individuals that have the keys. But for anything to happen, there needs to be a certain quorum met with people signing with those keys and different wallets within where the Bitcoin's being custodied. Again, that's all verifiable on chain as well. And they're going to be moving towards a more decentralized approach with the launch of their Great Core, which Badger is going to be one of the participants in. Badger is also on the multi-sig for WBTC. So, that was an important step for us, Ren and WBTC being, the largest tokenized Bitcoins, and the majority of those tokenized Bitcoins being deposited in Badger. The DAO and in turn the Badger community has influence around, the underlying protocols that are WBTC and RenBTC, which is important as well. So hopefully that helps answer and bring a little more light to your thoughts and concerns around risk as it relates to Bitcoin.
Super helpful. I appreciate it. Thanks all.
No problem.
All right, guys, and that's all we have for today's episode. Spadaboom, thank you so much for being here, man. For those of you, that do want to learn more about Badger, they've got a really vibrant community. Make sure you go check out their Discord. In my experience, at least, Spadaboom's been overly helpful at all times. So, I'm sure if you reached out to him, he'd be more than happy to answer any additional questions. Make sure you follow him on Twitter. His Twitter profile is pinned, or will be pinned to Frog Radio. So you can find him there. Now, if you didn't catch this whole episode, or you want to go back and listen to some of the points that Spadaboom has made, we will have this available for your listening pleasure on YouTube, probably in a few hours. And then later on, maybe later today, maybe tomorrow, that will be coming to Spotify and then other locations soon. So keep your eyes out for that. And I know I've got a lot of Avalanche enjoyers here in the chat. If that's you, keep your eyes out for Badger coming to Avalanche sometime soon, hopefully. I know myself in particular, I'd love to be able to interact with the platform there. But once again, Spadaboom, thanks for coming. You're probably one of the most well-spoken guests in all of crypto. So, I really appreciate you being here and, just bestowing this ancient Bitcoin wisdom on us all today.
Well, dude, thanks for having me. This was a lot of fun. I think in general, and one thing that I like to share in closing is, this is one fight, right? Like, we're all together in this, regardless if you're if you don't participate in Bitcoin, think Bitcoin shit, if you're all ETH, if you're all Avalanche, whatever it is, you want to throw those maximalist, ideologies away. There's a much, much, much bigger fight that's going on right now. And the fight is really around, the old guard and the centralized control that we're all trying to fight against. And we need to bound together to be able to accomplish what many would assume to be the impossible. So, please don't go on one side. Please don't attack each other. If it's Bitcoin, if it's Ethereum, if it's whatever, it should be all love. So I'll just say that.
Right on, brother. I totally agree with that. All love, guys. Once again, we're all going to make it together, or none of us are going to make it. So we might as well be friends during the process. Everybody that came and listened today, thank you so much. Keep your eyes on Frog Radio's Twitter, and we will be posting information regarding the YouTube and all that shit pretty soon. But everyone, have a wonderful day. Spadaboom. Thanks again, brother. We'll see y'all later.